The gravity-defying equity markets continue to dominate the headlines, but so too is the rising dollar and also rising gold that we've seen recently, a triple event that doesn't happen very often, but it has been the case now for a matter of weeks. Bryan Noble from TraderNoble.com joins us with some more analysis. I know, Bryan, that you talk about intraday, you're a day trader, you're in, you're out very quickly. So the longer term picture doesn't really mean an awful lot to you, but I mean, you've got to admit the fact that these markets up at these levels at the moment, these global indices, S&P just keeps on scoring records.
It's grand, and it's just every short position is just getting squeezed every day. You know, you look at the CNN feed, or greed and fear index, we're up at 80. The fair value of the S&P is probably 2130. We're at 2 standard deviations almost above that at the moment. It's just insane, but until we get a set extreme that lasts for more than a few days, it's very hard to be short these markets. And personally, I think this S&P really needs to break 2298. Given the huge acceleration that we've had over the last few days, on the allegedly on the back of the Catalyst Fund having to cover their short positions.
So 22,1980 is the point you want to see, which will tell you that this rally is over.
Yes.
It's obviously not going to get there in one massive, great big decline, I wouldn't have thought. But I mean, leading up to that, presumably we're talking about a trend, or is it the market just going to drift from here?
Well, I mean, what I've been doing is, I've been picking levels to go short, but you can only be short for a few hours. You're getting your short, you buy back your shorts, and you're putting low buy levels in the S&P because you don't really want to get caught long. But you got to trail your stop. If you are a long-term buyer of this market, you're paying with fire. We know that the business intelligence advisor survey is up at 70%, which is the highest since 1987, before we had the 87 crash. The daily sentiment index is at 91% buzz, which is the highest in 3 years. And these daily sentiment index, people don't realise what a key indicator it is. When gold in December was down at 6% buzz for 2 weeks, gold fell maybe $30 from when it initially hit that level, and then we rallied back $100 as we've seen over the last few weeks. Similarly with the S&P, when we're up here at 91%, okay, we might go to 92, 93, 94%, we don't know where, but the end game is near. And obviously the key is Trump's tax proposals to Congress next Tuesday.
Yeah, okay. Just as well, to talk us through the sort of candle shapes you're looking for, what sort of candle indications are you looking for to give you the possibility that things are turning?
Well, first thing we need is a key day reversal. So basically we need to make a higher high from the previous day and then a lower low from the previous day and close on the lows. That'll be the first indicator then that we can possibly go short with a stop above whatever new high is put in. If the Dow goes up to 21,000, it will be the quickest rally from 20 to 21,000 that we've seen in history. It's just, it's gone up 750 points in a few days. Incredible.
Yeah, we're just a couple of hundred points away from that level. It is phenomenal. Just returning very briefly to the S&P 500, do you have any upside big round figure targets?
Well, I mean, I think 2375 to 2390 is very, very significant. And obviously we've got round number resistance at 24.
Because it's off the top of the chart. Why is that significant?
It's just because the RSIs, the daily Bollinger Band, we're outside the Bollinger Band, the Williams Index, every indicator that we should be going short, we can't, because the market just keeps rallying every day. So if you are short, you're going to be short for a few hours. And the other thing about the S&P, what people forget, gaps. Anytime you have an open gap in the market, so that's basically whatever the close is in Chicago at 9:15 on an evening to the opening the next day 2:30 London time is a gap. And from Friday to with the markets closed on Monday for the President's Day holiday, we had a gap in the S&P from 47.5 to yesterday's low in Chicago at 56. So I think if the S&P, I know this is crazy, but if we get back down to 2350, it's a buy with probably a 7 handle, which would be a 2343 stop, looking for move back to new highs. And as we've seen, the Bollinger Band is beginning to expand, so we can easily go up to this 2375 to 2390 area first before we come off. But there's trying to speculate picking tops, it's so difficult. I think we need a sell extreme. I've been bullish for this market for the last 7 or 8 years. Just keep buying dips. Yes, we go short as well, but when you're short, you're scared, and you've got to get it back in quickly.
Yeah, and this is, I guess, has been one of the major features of your blog recently, hasn't it? As to where you trade these markets.
Yes, it's significant. I do a day trading service, and the key to my service is the updated emails during the day. So, for example, last Friday I had a sell level in the S&P at 2346. I emailed the guys at 8:30, move it up to 50 to 54, change the sell range. That got filled on Sunday night, and then we were trading 5-6 handles over on Monday morning. So it's a very hands-on service. So I am doing the trading for the subscribers.
Okay, let's take a look at euro-dollar to ask about your thoughts there. What's the overarching theme on euro-dollar?
Yeah, well, I mean, the euro-dollar, well, we've got two things here. One, we've got Trump on one hand, who, at the end of January, when I was here with Sarah doing the last interview, we were talking about a key month reversal in the dollar index. Amazingly, the dollar fell 150 points between that Friday and the month end on Tuesday, helped by Trump with a tweet saying that the dollar was overvalued and it had to sell off to help manufacturing in the States. The dollar index got down to 99.50, made a new low. The euro got up to a high of 108.30. Significantly, the euro did not have a key month reversal. It missed it by 50 points. On the Wednesday, first trading day of February, the dollar made new lows again, and then since then we've just rallied. The dollar had a 5% fall in January. The euro got up to 108.29, as I said, and here we are today now, 105. We're oversold. We're at the bottom of the Bollinger Band Williams Index today, so temporarily I think the euro will probably bottom somewhere between 104.50 to 104.90 for a trading buy. The real level to watch in the euro is the January 4th low at 103.41. As long as we can hold above that, I think the euro is okay. If we break 103.41, then we're probably going to have this run to par that a lot of people are talking about. But
all the way down to parity. That's in fact, that's not actually too far away from where we are at the moment. And I guess we're talking here French election shock, or
exactly. And the one thing I've learned from trading over the years, if you get strong economic data like we got yesterday, and the euro can't rally, you got to respect it. And the euro to fall a big figure on the back of that PMI data, which is very strong, 5-year highs. And I think if it wasn't for the French elections and Le Pen making a run in the polls, and obviously after what happened with Brexit and what happened in the US presidential elections, people don't trust polls anymore. So we've seen that widening in the spreads between Germany and France, and flight to safety back in the bun this morning.
I think the spread's about 80 pips, I think, at the moment between the two. I mean, how far out does that have to get before we see parity?
I don't know. I mean, I think because if depends on the polls. I think it's all to do with the polls. If she starts to increase her percentages again, well, then this spread will just widen out further.
Okay, all right. Let's move on and take a look at. We're not talking about gold today. We're talking about silver, and this is something I don't often get asked to discuss. So it's interesting. We're at $18 an ounce at the moment for silver. We've seen this wonderful rally. Similarly, of course, for gold.
Yeah, I mean, when I was here at the end of January, silver bottomed at 17.60 after I did the interview, and you can see by the green candle there, we had a lovely key day reversal, and it's just continued on since. And people forget about silver. In May 11, silver was trading at $51, so we've got absolutely destroyed. And I think with Trump's new fiscal policies, going to spend money in infrastructure, people are going to need silver, and I think there's no reason why silver can't continue to motor. If you're buying silver here, your safety net is probably $17.27 to $17, so probably a 70-cent stop loss from here. If we can break it back above $19, I know, which is $1 from here, then I'm looking for 21 and then possibly up to $25 over the coming months. Yeah,
that coincides there obviously with that high back in November last year. We've spoken about euro-dollar. The dollar obviously is a key feature of what's happening since Trump came to power, and obviously he doesn't want the strength of the dollar that we're getting, but he's getting it nonetheless. How do you trade dollar index?
Yeah, I mean, it's difficult. After his tweets coming out about the dollar, and the dollar sold off that 5% in January, as I said, we had a key month reversal. Then we had the Japanese Prime Minister Abe over with him a couple of weeks ago. Trump again was mentioned the dollar. Abe allegedly said to him to stop mentioning the dollar, and he hasn't talked about it since. Now, how long he goes quiet on this, I don't know. But I think given the pickup in Europe, I think it's only a matter of time before the euro does rally, and there's no doubt Trump wants a weak dollar, and over time I think he will get a weak dollar, despite the fact, the problem
by virtue of the fact that other economies are doing better, or they're improving now, following on from the States' recent recovery.
Yeah, it's amazing the way that the whole thing is just planned out. But the problem with America is if they go and increase rates too much, how do they fund the deficit? So I mean, this deficit is enormous, and if the dollar gets too strong, then we've $10 trillion of loans to the emerging countries. So if the dollar does turn around and strengthen 10 to 15% from here, how are they going to make their interest payments? So I think it's a very precarious situation. I think it's a bit like last year where they were talking all these rate hikes. We only did one in the end. The bet is now we're going to do 3 in this year. I think we probably max will do is 2, unless things change.
If they don't move in March, they're then starting to get a little bit squeezed, aren't they, for 3? January.
But I mean, you look at the average earnings. The average earnings in the last payroll report for January were very poor.
Yeah.
So if you're getting the poor average earnings, there's no pressure on inflation yet. Despite the Harker's come out and said there is pressure on wages, but we haven't seen it come through in the numbers.
Yeah, okay. Mester's as well going for 3 interest rate rises this year. Let's just quickly talk about levels here for the dollar index. Where are you going to buy and sell? What's your target?
Yeah, I mean, 102.45 is a very strong resistance level, so I'd be a seller in front of that with a 102.80 tight stop. On the downside, I think par 80 to 101.30 is very strong support. The real support for the dollar is the low 99.05 on the first Wednesday in February. If we break back below that 99.05, then I think we can go down to 97 and maybe even 95. But again, we need something dramatic to happen for that to happen. It's all on what's going to happen at the FOMC meeting on the 15th. There's a 42% chance priced in for a rate hike.
That's creeping up, isn't it? It was 30, I think.
It was 30, got up to 49. It's kind of come back down again. But the numbers out of States yesterday weren't exactly very strong. So the PMI was much stronger in Europe, ironically.
Yeah. Look, okay, Bryan, we've got to leave it there, but thanks indeed for joining us
for
this look around some of those markets. Bryan Noble from TraderNoble.com. You can catch up with him on his blog on that website. And Bryan's back with us regularly to take a look at some of his picks today, looking at S&P, Eurodollar, silver, and the dollar index.